have a really interesting perspective into how startups are doing, a sort of startup barometer, if you will. Are startups thriving now? Are they rebounding, or are they still suffering?
So overall, first of all, it's great to be here. Overall, when you look at the startups, they're doing really well. Now, it's concentrated, so it's not every single startup, but the best companies are raising the most money. They're getting the most attention. They're performing exceptionally well. So you can look at the top 1% of the companies that are venture capital backed. They've commanded 30% in the last quarter, 30% of all the money that was raised. So it's being concentrated in the best companies. More money is being raised by venture capitalists to fuel these companies. And so I would say overall, the innovation economy is doing incredibly well.
And how easy is access to capital? I mean, going into this pandemic, it seemed like there was more money than ever chasing tech deals. And yet, of course, when it happened, I remember that memo from Sequoia warning entrepreneurs to conserve cash, double down, look at how you can do more with less. How would you describe access to venture at this moment, now that we're moving into a new normal?
Yeah, I think going back to when the pandemic started last year, I think it was a really interesting time. There was about a 30-day period, 30 or 45-day period where everybody was very concerned about what this could look like. And so it was conserve cash, be very cautious, stop hiring, all those things that you'd normally see when you have a dramatic market shift or an economic shift. But then very quickly it shifted from, we'll never do a deal where it's over Zoom to, we did our first couple of deals and it actually worked really well. In fact, it worked better. And all of a sudden, starting in the second quarter, you started to see the momentum start to build. And more of our clients, more of our venture capitalists, were doing deals in the second half of 2020 was truly incredible. And that's carried to in the first quarter of 21. So the level of venture capital has been incredible. And the outlook, and based on fundraising by venture capitalists, new funds being raised has also been exceptional. So that combination creates a tailwind, and we certainly think that is going to continue in 21 and for a period of time to continue.
So what kind of deals are you doing, and what kind of deals are you not doing, or are you shying away from?
Well, predominantly, we have four businesses. So we kind of have four different things that we do. So predominantly, we're a commercial bank. So we work with roughly 50% of all venture-backed companies, roughly 65% of all venture capitalists. So we're doing a whole variety of deals. So lending to startup companies, which most banks shy away from, all the way up to multi-billion-dollar companies. So we kind of cover the entire debt capabilities as an institution. But then we have a private bank. Soon to be, we'll be adding Boston Private, which we announced an acquisition January 4th of. Hopefully that'll close this summer. So our private banking capabilities will expand with our investment bank, SVB Leerink. They were doing really well. And then finally, SVB Capital, where we invest in venture capital firms. So what kind of deals we do, it's debt, it's equity, it's helping with taking companies public. So literally it's across the board. And we think that's what's so compelling, kind of a one-stop shopping for the innovation economy. That's what gets us excited kind of every day.
Okay, well, you just celebrated 10 years as CEO. Congratulations on that. And you had a huge quarter, 3 quarters in a row, actually, of double-digit revenue growth. The last quarter, the first quarter of 2021 was your best in history. What's driving that growth? And is it sustainable as we go back or into a new normal, whatever that is?
Yeah, well, it's been a great 10 years. And I always tell people, I'm confident I've got the best bank CEO job in the world, and maybe one of the best CEO jobs, mainly because really two things. One is the clients we get to work with, which are the startups, the innovators, all the way again through these companies that are going public. It is incredible to work with them and partner with them. And that innovation economy has been really doing so well. So much money has gone into it. That's really been the catalyst for the growth that we've had over the last 3 quarters, record quarters, each of the last 3 quarters. And as we look out into the balance of this year, as we articulated our outlook for the balance of 21, it was a very, very positive outlook because the reasons I talked about earlier, money's flowing in, activity levels are picking up, exits are very strong. So all those things are driving the innovation economy. And because of those 4 business units I talked about earlier, and each one of them benefits from success in this industry, that's what's fueling the growth for the business. So, as I've said over many years being on this show, the innovation economy is the best place to be. And I can't tell you what's going to happen from quarter to quarter, but I truly do believe over the coming years, that's the place to be from an industry. And we're very fortunate to be right in the middle of it.